Good morning, May 8th, 2026. Here's what's happening right now. Stock futures are pushing higher across the board. Gold is heading for a weekly gain, and Bitcoin is fighting to hold 80,000. That combination tells you the market is leaning risk-on into the biggest data print of the month. Non-farm payrolls drop at 8:30 Eastern. In this video, I'll walk you through what's moved overnight, where every major asset is trading right now, and the three setups I'm watching before the open. Here's the main story. Trump confirmed overnight that the US-Iran ceasefire is holding. Reuters reports skirmishes flared up, but neither side is escalating. And here's the surprising part. China confirmed earlier this week that an oil tanker was attacked in the Strait of Hormuz, and yet crude is barely moving. Look at oil here. Price is holding around 94.86, basically flat overnight. What you're seeing on the chart is a rectangle. Price has been chopping between roughly 94 and 95 for the past several sessions, building a base after last month's rally. Rectangles trade their range until decisively broken. The level I care about is 94. If we lose that on volume, it's a moderately reliable breakdown signal that the war premium is unwinding. Hold above it and we stay in consolidation. My read, the market is pricing the ceasefire as the dominant signal, not the tanker attack. That's why oil is calm despite the headlines. Now look at gold. Gold is at 47.27, up about 1/3%. And per Reuters, heading for a weekly gain even as US-Iran talks ease inflation fears. On the chart, this is a rising channel going back to mid-April with 4 clean touches on the lower rail. Price is grinding higher inside the channel, not breaking out. The operative level is 4,700. That's the channel midline, flipped from resistance to support, a textbook role reversal. If we hold above it through the jobs print, the channel stays intact. Moderately reliable continuation. A break below on volume opens the door back to 46.50. The second story today is the one that will dictate the open, non-farm payrolls at 8:30 Eastern. Consensus is 62,000 jobs added, unemployment holding at 4.3%. Bank of America is calling for 80,000. Goldman Sachs sees 75. But Citi is the outlier. They're forecasting a print of -15,000, which would be a major shock. What surprised me reading through Forex Live's analyst roundup was how dispersed these calls are. That tells you traders are bracing for a wide reaction. Here's where the market is trading right now. S&P futures, 74.01, pushing higher, up about 0.5%. The structure is a clean ascending channel going back 2 weeks. Operative level is 73.80. Channel support, moderately reliable as a buy zone if we test it. Nasdaq futures, 28.910, leading the move higher, up nearly 0.8. Tech is back in charge. That's a breakaway gap from yesterday's session that's holding highly reliable bullish signal. Dow futures, 49,843, lagging the rest, up just under 0.3. The Dow is grinding higher inside a wider trading range, low conviction so far. Russell, 2864, up about 0.5%. Small caps are participating. That's healthy for the broader risk-on read. Gold, 47.27, up 0.33% inside its rising channel. Bitcoin, 80,200, up just 0.25%. Per CoinDesk, BTC slipped below 80,000 earlier and is now retesting it, a pivotal level today. Dollar index, 97.95, drifting lower, down about 0.1. A slightly weaker dollar supports the risk-on tone. And crude, 94.86, holding flat in its rectangle. So overall, stocks leading, dollar fading, commodities steady. Key number before the open, Watch whether S&P futures hold 73.80. Three setups I'm watching today. First, the S&P. The structure is the ascending channel I just walked you through. Going into the 8:30 jobs print, the level that matters is 73.80. That's both the channel support and yesterday's pivot. A strong NFP, say above 80,000, likely sees a continuation higher with a measured move towards 74.50. A weak print, especially Citi's negative 15,000 call, would test 73.80 quickly. If we break through that on volume, it's a moderately reliable channel breakdown, and we head towards 73.20 next. The whole day pivots on this level. Every other equity setup is downstream of how the S&P reacts. Second, Bitcoin. Per CoinDesk, BTC slipped below 80,000 overnight, liquidated 300 million in futures bets, and is now retagging the level. What I'm watching is a potential double bottom forming around 79,000. Two equal lows with a clean reaction between them. Double bottoms confirm only when price breaks the reaction high. Here that sits around 81,500. A clean break above on volume is a moderately reliable reversal signal, with the path opening back to 83,000. If BTC fails to reclaim 80,000 and rolls below 79, it's low reliability. Watch for whipsaws, because Bitcoin ETFs just snapped a 5-day inflow streak per Cointelegraph, which adds selling pressure. Third, the gold miners. GDX is set up cleaner than GoldSpot itself. What I see on the chart is an inverse head and shoulders going back 6 weeks. Left shoulder in late March, head in mid-April, right shoulder forming now. The neckline sits around 46. A close above 46 on volume completes the pattern. That's a highly reliable bullish reversal signal. And by the measured move rule, the projected target is roughly 48.50. The setup gets a tailwind if NFP prints weak, because that increases the odds of Fed cuts, which lifts gold and the miners. If the right shoulder fails before the neckline breaks, the pattern is invalidated. That's the playbook. Equities pivot on the channel. Bitcoin pivots on the double bottom. Gold miners pivot. So here's the takeaway. Stocks are pushing higher into one of the most watched data prints of the year. The Iran ceasefire is holding, gold is steady, and Bitcoin is fighting for a key level. Everything pivots on the 8:30 jobs report. Today's action will tell us if the risk-on tone has staying power. See you all tomorrow at the same time. This is not financial advice, for education purposes only.